Hey, everybody, and welcome back to the VA First Time Homebuyer Bootcamp. My name is Dina Watson, and I am the co founder of Moving the Military. We are a platform for education and resources that are not only for our real estate professionals, but we also aim to be the #1 platform for education for you, the service member and the home buyer or seller. And so we're going through a 4-part series on what do you need to know as a first time home buyer considering using the VA loan. And this is session 2. So if you have not watched session 1, I'm going to ask you to go back over there first because we want to make sure you're getting the education and the knowledge in the right order to have this biggest impact possible when you go to buy your first home. So today we're talking about financial readiness and the things that you need to know before you even apply to the VA home loan. Now, as a reminder, the VA has nothing to do with the VA home loan in regards to pre-approving you. So that was a myth in the first session that you would have remembered, hopefully. And I want to remind everyone here because this is not a process you go through with the military. This is not a process you go to with through with the VA. This is a process you go through with a trusted real estate lender or mortgage broker in private lending or like a Wells Fargo or USAA or somewhere like that. You have different types of lenders that you can go to. And I want to start this conversation by saying we partner with those folks that can serve you no matter what state you're moving to. But I am not a mortgage lender. So any advice here, I would want you to double check that with someone licensed to do mortgages. I'm coming to you from an agent perspective. I've been a licensed real estate agent for over 15 years now, serving the military the entire time. And just remember, I'm not a mortgage broker, so I'm going to go over the high levels with you. But if you want more detailed information on how it pertains to you and your financial scenario, let me know. I will help get you partnered with a few different people you can chat with for free. None of our consults cost money here, so you can talk to us for free. And I can partner you with somebody that can help you out. So let's talk about how qualification is easy and readiness is the goal. Now, qualifying for a VA home loan, while I say it's easy, that can be a little facetious. I guess what I rather mean is the process is quite simple. Now, the more you're prepared and the more you know your numbers, the more confidence you're going to have and the more ready you feel. This is the place where a lot of people slow down if they're intentional. Because most of the time, buyers tend to rush a pre-approval because they've found a house and they just have to get pre-approved. I'm actually going to suggest that you slow down this process and maybe this will help you. But if you're really, 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 really paying attention and you've got some time, understanding what you need to do to get ready to buy or be in a better position to buy is really important. So if you have some runway and you've got a few months before you're going to be moving, even if you don't know for sure that you're going somewhere, reach out and we can help you because the more you know ahead of time, the less surprises you'll have whenever it matters. And whenever you're actually trying to move your whole family across the country, we don't want surprises. So most people rush the pre-approval process and it's a little bit backwards. So in this session today, I want to help you know what to understand and what numbers to look at before somebody else defines it for you. Because this is one of the places where VA buyers, especially first-time home buyers, get hurt, is because they're not ready financially. Maybe you're approved for too much. And by that, I mean more than you want to spend on a monthly basis. I will remind you of this. A VA home loan agent or lender, they're going to tell you how much you can purchase. If you don't come with the budget that you have and you purchase the home that you're pre-approved for, you may not, quite frankly, be able to afford it or you don't want to afford it. So the first thing you can do before reaching out to any of us is decide on a monthly basis, how much money do you want to spend on your mortgage, your insurance, your taxes, and your interest? All of that combined. Because for a first-time buyer, this is something that I don't think they quite understand, is that when you rent an apartment, okay, you're paying rent for the apartment itself. You're not paying for, all of it's combined into this total, but you don't have all these other variables. So when you buy a house, your one monthly payment includes 4 things. It includes the payment for the property that you purchased, like however much money that was. It includes interest. It includes your taxes on the property and your insurance. Now, I'm going to caution you on something. Every single year, your payment can fluctuate. This is something that most people don't tell their buyers and they're not prepared for this when it happens. And the reason it can and will fluctuate every year that you own this home is because the part that's fixed is the part of whatever you bought, let's say $400,000, that part is fixed because that's how much you paid. The interest is usually fixed unless you get a variable rate loan, but most of the time you won't. So the the interest and the home price are fixed. The taxes will go up. Mark my words. Like, there is one thing you can know for sure is that taxes on your property are not going down. They're not. And the insurance is usually going up every single year. So there's a portion of your payment that if you get a payment to begin with that's way too tight for your budget, please know that next year you now can't afford your home. So if I'm working with you and we're doing a strategy session, which I've shared this before, but we offer these for free. Let's say that you can afford your maximum number is $2,000 a month. I'm going to encourage you to find something for $1,750 or $1,800 a month. Because if your max is $2,000 a month and those things go up next year, which they will, you may now be paying $2,200 a month or $2,100 a month, and you can't afford that. So what I want you to remember is if you get a payment that is too tight to begin with, it's going to be too hard to accommodate next year, which creates stress after closing. A year or two later, you're wondering why you're not able to pay your bills. Well, you didn't account for the fact that your payment could fluctuate year to year. Lenders are going to approve you based on guidelines. They will give you a total you can spend, but that doesn't mean you have to. You have to live with the payment. So just remember, when you're going to talk to a mortgage lender, tell them what payment you want and then ask them if you're approved for that much. I really would encourage you not to ask them, well, how much am I able to spend? Because what human nature is we're going to try to justify why we could spend that much and cause ourselves stress in the back end, and that's just not necessary. Being ready for this is going to protect your lifestyle. Because if you're used to having flex money where you can go out to eat, you can buy clothes, you can, spend $6 a day on, coffees at Starbucks or whatever. But all of a sudden your payment is too much, you now are compromising your lifestyle to accommodate for a mortgage payment, and you could have avoided that. Now, let's talk about the second thing that comes into play here, your credit score. When you're going to get pre-approved for a mortgage, they're looking at a few things, but the first thing they're looking at is your credit score and your income. Okay, so some things to consider. VA home loans are flexible. And what I mean by that is you're allowed to have a little bit lesser of a credit score than some other loan types. But lenders are also looking at things like your payment history. Do you pay things on time? Are you recently not paying things on time? What are your trends over time? Because one late payment doesn't define you, but if you have a pattern of doing that, that most definitely can. So just as a reminder, if you are going to buy or sell a home in the next 12 months, not sell really, but if you're going to buy a home in the next 12 months, you need to make sure you don't pay things late that get reported to the credit bureaus, because that can cause you to get knocked out of the running. Even if you've got great, if you've got great income and you normally are wonderful, but for the last 12 months you've struggled, it's really important that you pay attention to those things. Now let's talk about the math behind your comfort level. You're going to hear people talk about DTI. That just stands for debt to income. It's how much debt monthly am I paying versus how much income do I make. And as you see here, it's the income versus the obligations. Now, they're not looking at how much debt do you have total, like 100 grand or 50 grand or 20 grand or whatever. They're looking at the payments for the debt. So the minimum payments or the payments you make for the debt versus the number of dollars you pull in every single month. The things that you pay for monthly that are considered debt payments, they matter. There's a threshold of how much debt versus income you can have before you're not approvable by a VA lender. So just remember that. Also, things like lifestyle debts will also count. Some things to consider. DTI compares your monthly debt to your monthly income, not your overall debt to your overall income. Things like car payments, credit cards, student loans, all of that is wrapped up into your debt to income ratio, the percentage of debt you have versus the percentage of income. High DTI limits options and flexibility. If your debt to income ratio is high, you may not even qualify for a VA home loan, even though you've earned it. If you have high DTI, you may get a higher interest rate, which causes your payments to go up. Lower DTI puts you in a stronger position. So if you're preparing in the next year to buy something, a house, please don't buy something. Like, don't buy a car, don't open credit cards. The fewer new debts you could open, the better. So let's talk about military pay because the next thing they're looking at is your income and the stability of your income. They'll look at things like your base pay, your allowances, are you a dual income household? They'll look at all of these things. So, something to also make mention of, which we won't talk about so much here, but if you're buying your home, if you're looking to buy a home and you're still in the service, but you're getting out in the next 6 months, you may not qualify for your VA home loan unless you already have a job lined up. This is way too much to get into on a webinar today, but just know that if you're exiting the military in the next 12 months, even though you've earned the benefit, if you don't have a job or if you don't already have approval for your disability, which you probably won't, they can't count that income because it's coming. They can only count what they can track. So just remember, they understand things like BAH, BAS, they understand promotions and new allowances and schools and all of those things. If you have a really great VA lender, they get it all. They understand all of it. PCSs do not hurt you, but big changes like ETSs or shifting in a career, for example, if you go from a job where you have allowances to a job where you may not, those things need to be discussed with us as your agent, but also with your lender early. And you need to disclose them because we could assume that you're good to go and the lender could approve you, only to realize that when you find a home and they're running everything again, that you've left a job and a part of that income has been left behind. And then you're all of a sudden now not qualified. So just please disclose everything you possibly can. So, one thing that I find is a wild myth that I just we gotta get this to stop. People tend to know that your VA home loan has no down payment. But what they don't quite understand is that does not mean that there's no money out of your pocket to buy a home. What that means is you're not paying a portion of the property down in order to buy. Like a conventional loan, for example, you could have to pay anywhere from 5 to 20% of the price of the home just to qualify for the loan. No down payment just means no that. Okay. It does not mean no money. So, things that you will need in order to buy a home, number one, closing costs actually exist when you're working with a VA home loan. Now, the job of your agent is to negotiate as best they can to not have you paying things, but just know that if you find a home that you absolutely can't live without and that seller refuses to pay closing costs or concessions for your agent or funding fees or any of the things that you're asking for, that's your responsibility as the buyer. So you need to have things like closing costs, and your lender can share that total with you for what you should be projected to pay. You should probably have a little bit of reserves in your bank account. Running down to zero does not look good for a lender. Breathing room is power. The more money you have in order to actually make these things happen, the better off. You're also going to pay for things like a home inspection. That could be anywhere from $400 to $600 or $700, depending on how big the house is. You might pay connection fees for your water or your utilities. You might need to get a survey and you have to pay for that. You might have to pay up front for an appraisal and get that compensated back to you later. There are things that you have to pay for when buying a home that do not qualify as down payment. Now, like I said, our job as the agent representing the buyer, I tell people like this all the time. My job as the agent representing the buyer is to negotiate on the buyer's behalf to walk into that house with $0 out of their pocket. Now, my job, if I'm representing the seller, is to have my seller walk out of this transaction with the buyer paying all their own fees. That's where a strong negotiator comes in. Okay. So remember this. No down payment does not equal no money. Some things to consider. Although a VA home loan does not require a down payment, you can still put down money if you want to. There's no reason not to if you have the money to do it. The buyer's still going to need for things like inspections, moving expenses, closing costs with your lender. We already covered that. And just remember, you should probably keep an emergency fund after you close. I've shared with you in the last session, we have a few rental properties. We have a savings account for each of those 7 homes in case something went wrong. We're not struggling and like trying to find somewhere to scrape money together. Now let's make a shift. The most important decision you are going to make before you get started, your payment comfort versus your max approval. Okay. When a lender says you're pre-approved for $500,000, but you want your monthly payment to be $2,400, those two things are not the same. A $5,000 or $500,000 home on a current interest rate is probably closer to $35,000 to $4,000 a month. And that I'm not a lender. I'm just quoting out of what I know for right now. So you could end up in a spot where you're working on and looking at homes that you fall in love with up to your approval maximum that you don't believe is smart for your budget. Just remember, while you're in the military, your buying homes should be a logical, strategic decision, not an emotional one, unless you're buying your last home you'll ever buy, right? Or unless you're staying there and you're retiring in that location, that's different. But if you still have the likelihood of getting moved by the military, you should remember this is a logical decision. Can I sell this thing? Can it rent for my mortgage payment? Those are things you should consider. Flexibility beats maxing yourself out really every single time, without doubt. Some things to note: lenders approve based on math, not based on comfort zone. You should approve yourself based on comfort, future PCS, lifestyle goals, all of those things. The best buyers do not stretch themselves. You're going to position yourself to win every single month, okay? Now let's talk about being honest before you move forward. Could we handle an unexpected expense? If we buy this home for this price and we have an emergency, do we have enough flexibility in our monthly payments in order to say yes to that emergency? Does this payment limit our options for what we're allowed to do? I believe you shouldn't be house poor, right? Like, I don't believe in being house poor. So if me buying a home prevents me from going to Starbucks or going to my favorite acai bowl place or taking a vacation, the answer is hell no. I'm not doing that. Everyone has to make their own decisions. But if your payment limits your lifestyle options, I would probably tell you to find a lesser expensive home. Now, the last one that really you have to talk to someone about, we're happy to help you, or an agent you select is fine. Would this still work if I PCS and can't sell it? If worst case scenario happens and we get moved and we have to rent this place, can I rent it for more than I have to pay monthly? That is a very important question that you should know before making an offer on anything, okay? I say this because I've seen it happen all too many times where military home buyers put themselves 3 years into the future in a bind and they don't know it yet because they bought a house that they love in a part of town they love, and their mortgage is going to outrun the rent rate in that area, meaning they can't rent it for what they pay monthly. So they're having to pay monthly for a house they don't live in. These questions and these answers are going to protect you in the future. They're going to protect you in the future. The ultimate win here is buying a home well and doing it right. So as we talk about this, you're looking for 3 things. You're looking for leverage, you're looking for confidence, and you're looking for control. This will help you make stronger offers, better decisions, and less stress. So some things to consider, and I want to leave you with this. How the home buying process actually works is session 3. How do you actually go through buying a home? What all is involved? Yada, yada, yada. What happens when? All of that's going to happen in session 3. So I will see you back here for session 3, because I think session 3 is going to remove some of the fear by helping you understand what the process is and making things predictable. I'm going to share with you what's normal, what's not normal, what may be overreacting, but I believe the education always should come before action. So I will see you over there, and I hope you learned a little something in our session today.